This is the 11-hour option spread strategy brought to you by Value Charts, and my name is Dave Aquino. I am the Stocks and Options Live Trading Room Specialist for Value Charts. I run the live trading room and also all the webinars and workshops for our Options and Stocks program. Again, I'm very happy to bring this great strategy to you. It's been found with a lot of success by our traders. The strategy is simple. It is straightforward. It is high value, high probability, and honestly, it's a very simple set it, forget it strategy that has an extremely high win ratio. A lot of our people like to make money while time is passing, and the intricacies of this program, actually the strategy, makes it very straightforward to take advantage of that time decay of options. So again, we'll be getting into that. I just wanted to first welcome you into our session today. Okay, for those of you that have been to one of our sessions before, we want to go ahead and invite you to submit your questions via the GoToWebinar side menu as they pop up in your head while I'm talking. Now, I will see those questions, but I may not be able to address them right away. I will try to address them in the pertinent section or at the end of the workshop so that you can go ahead and type them in as they come through. I would advise you and I would encourage you to stay all the way to the end. I have a really special offer for you because I believe so strongly and have seen such good results from this trading workshop and this trading strategy that I really want to expose as many people as possible to it. So please stay to the end. Okay? All right, so let's go ahead and get started. Again, really quick risk disclaimer. This is required by all our financial education type programs like ourselves. We just want you to know that trading or investing carries a lot of risk, that you should invest and trade based on your investment objectives, your level of experience, and your ability to tolerate risk. Now, this program is put together for education and assistance in making you make your own independent investment decisions. We're not giving any advice, and we want you to know that we've done our best to make sure this information is accurate as possible, but we're not liable for any loss or damage which may result from directly or indirectly, from the application of such information or transmission or failure in that transmission of any instruction in connection herewith. Now, again, any past performance results that I can show you are hypothetical and have many inherent limitations. Now, again, we're not representing that this account will or is likely to achieve profits or losses similar to those shown. And most importantly, past performance is not necessarily indicative of future results. CFTC Rule 4.41, I have to let you know this is a U.S. government required disclaimer. Now, the CFTC wants you to know that there is a lot of risk and reward in the futures and options market. Says don't trade with money you cannot afford to lose. This is not a solicitation to buy, sell futures or stocks or options on the same. And most importantly, just realize that past performance of any trading system or methodology is not necessarily indicative of future results. Okay? All right, so a little bit about me. Again, my name is Dave Aquino. I am the Stocks and Options Specialist here at Value Charts. I am a graduate of Vanderbilt University back in 1995. I became a full broker with Merrill Lynch at the age of 23. And I spent over 12 years as a senior advisor at the Vanguard Group, specifically in their ultra high net worth asset management service. My job was to manage the appreciated stock portfolios of high net worth families from the standpoint of developing cash flow and managing tax loss harvesting of highly appreciated stock. Okay, I have been with Value Charts and directing the trading room in the stocks and options area for over 21 months. So I've been trading live over 21 months and developed some really good relationships in that room. And we have a lot of fun, we make money, and we learn a lot. So pick which one you prefer to be first, because we do all three. All right, just a summary of what we are doing tonight. The 11-hour option spread strategy. The first point that I want to cover is what I call the essential Greek of time. This next is I'm going to talk about time decay even further and how that matches up on a weekly calendar. And then the purpose of this webinar is actually talking about my 11-hour option spread strategy and the parameters around that strategy. Okay, so the first aspect of this webinar I want to talk about is the essential Greek of time. Those of you that are familiar with options know that the price of an option is based on certain factors of the underlying stock. Now, those factors are normally known as Greeks, and that actually is how they pertain to the formula in the Black-Scholes option pricing model. The gentleman that developed this model actually won the Nobel Prize back in 1997 for a paper that they did in 1973. So basically, it's the pricing model for a derivative based on characteristics of the underlying, whether it be a stock or something else. Okay, but what's important to us is that factor that describes the sensitivity of an option until time to expiration. It's called theta. Now, theta is important because an option is a depreciating asset. Just like that brand new car you want to go out, you buy, you drive it off the lot, you spend $30,000, you drive it off the lot, it's now worth $28,500. You're like, what happened to the other $1,500? You drove it off the lot. You spent time in it. And as it gets older, as time passes, the value of that depreciating asset goes down. It's the same thing with an option. The closer an option that is out of the money, as it gets closer and closer to expiration, there's a geometrically accelerating decline in the value of that particular option. Okay? Again, theta is the option's sensitivity to time. Okay? I'm going to try to do this with a pen, so excuse me. It is a direct measure of time decay. Now, this amount increases rapidly as the option approaches expiration. Now, for options that are monthly, now these might have 90, 60, 30 days left until expiration. The greatest loss of rate to time decay occurs in the last month. Now, there are options out there called weeklies. Those are what we normally trade, and these usually have a lifespan from 7 to 10 days. And the greatest rate of loss of time decay in these weekly options is in the last 1 to 2 days. That's what I want you to remember. The weeklies have the greatest theta decay in the last 1 to 2 days. Now, when you're trading options, you can be a buyer or a seller. Now, option sellers use this time decay or theta to their own advantage. What they want to do is collect money due to time decay every single day. Now, you can sell a naked option, or you can sell what we call a credit spread. It's the same sort of thing. These are all both selling strategies. And when you sell a depreciating asset, you benefit from time passing. Okay? I hope that's kind of clear. Okay, no questions? Excellent. You guys will have to excuse me. Sometimes my PowerPoint freezes on me. 1 second. I apologize. Give me 1 second. I'm going to pause the screen here. And I may have to actually restart. This has happened only once to me in the past. Okay. I know you're okay with your screen. Just give me 1 second. I have to restart PowerPoint. Again, thank you for that. Okay, thank you. Let's give this another shot. Okay, here we go. So again, the most important aspect of theta for you to remember is in the weekly option, you have the greatest loss of time decay is in the last 1 to 2 days. Again, those are for weeklies. That's what we normally trade. And again, we like to be option sellers because we are collecting money due to time decay. I know it's a little bit different kind of thought process than maybe you're used to, but it's pretty nice when you realize that that position that you're holding is increasing in value every day because of theta, because of time decay. Okay, so this is what I mean by a geometrically accelerating decline. Okay, so right now this is an out of the money option, out of the money. Okay, you option traders out there know what it means. So right here at 90 days, it's worth about, looks like about $5. Okay, 90 days out, an out of the money option at a certain strike price is worth $5. Say the price doesn't move at all. After 60 days, you notice, wait, now this thing's only worth $4. That's not really good. All right, but it's still tolerable. Here at 30 days, you see that your option is only worth, let me just see if this works now. Oops, $3. Ooh, that doesn't work very well. And then now, here 2 weeks out, it is now worth $2. You see, if the price doesn't move, the option just keeps declining in value. 5 days out, it's worth maybe $1. And then from 5 days out all the way to 0, you get to like 50 cents, and then now it's worth 0 at expiration. So right there, it shows you that as you get closer to expiration, the rate of the change in the value of that option accelerates. And that's what we want to take advantage of. All right, any questions? How do I deal with increasing gamma? Well, Chris, basically what we try to do when we're selling credit spreads, we're selling them out of the money. And the way we do it, the way we structure it, is the fact that we position the option so that its momentum and various factors influence the delta, which is the value of the option as it relates to price, is either neutral or it's working in our favor also. So it's not really a problem, especially for the way we trade this 11-hour option strategy, and you'll see why. Okay? All right, so let's get practical here with time decay. So it's nice to know theoretically that this decaying asset does accelerate to the point it gets to 0. All right, now again, to reiterate, theta is the option sensitivity to time decay, and it increases the rate of time decay increases as the option approaches expiration. Again, the most important factor is in weeklies. That's in the last 1 to 2 days. And what we again try to do is collect time premium and then make money on that decaying asset. All right, so here's the regular calendar. Now, the options calendar is kind of funny that when you look at it, there's you come in on a Monday, you have 4 days left. Okay, Tuesday there's 3, Wednesday is 2, Thursday is 1, and technically Friday you have 0 days left or less than 1. But that is the calendar. Now, normally what we do in our trading room, Mondays we don't have any problems with directional options because it is still relatively far out. We use a lot of in-the-money options also, so time decay is not as big a factor. But on Tuesday and Wednesday, we usually have a credit spread selling strategy that is definitely different from the 11-hour strategy, but we do some there. Okay? Now, the day I want you to focus on, okay, is on Thursday. Thursday is when we focus on a specific strategy I call 11-hour options credit spreads. Okay? I do it approximately 12 noon on Thursday afternoon. Okay? Why then? Well, because you're already through the morning trading period. The busy part of the morning is over. You do have Thursday afternoon where it's also busy, and then you have Friday morning, and then Friday afternoon. Okay? So you have 3 busy periods until these options expire. But that's why we do it at 12 noon. We still have a decent amount of time that we can get premium, but 12 noon is already through the economic reports and the gaps and all gap fills and all those kinds of trades that occur in the morning. And then what we do is hold that position through the morning on Friday, and we're managing these credit spreads, and then we go ahead and let them expire worthless. Okay? So 11 hours. 11 hours is basically the amount of trading time from about noon on Thursday all the way to 4 o'clock on Friday. Okay? So again, this is what it looks like graphically. Again, what you're looking for Thursday is the 11-hour option spread strategy. That's what you're looking for. Thursday at noon. All right, any questions? Okay, thank you. All right, so let's go ahead and jump right into the strategy. I know this is what a lot of you are waiting for. All right, this 11-hour option spread strategy is, we've been implementing this in the room probably about 3.5 months. And what we say is it's actually originally described it as a very high probability trade, 80% or more. I actually have updated numbers in just a couple of minutes, but 80% or more. Now, the focus of this strategy is what I refer to as an overnight trading focus. We want to see what time decay does from through the afternoon on Thursday, overnight into Friday. Okay, there is a lot of time decay in that overnight time period. Again, because when is the greatest amount of time decay? In the last 1 to 2 days. So what we're doing is transitioning from Thursday into Friday, and Friday is the day, the last trading day that you can trade it before expiration. Now we base this trade on the daily charts, and actually more specifically the 60-minute chart. That is our trading chart that we really look towards, whether it be momentum, support and resistance levels, Fibonacci extensions, all that kind of those parameters. We actually apply that to a 60-minute chart. Again, the way we evaluate the candidates, it's dependent upon momentum and the strength of that momentum and the direction in which it's moving. We are looking for support and resistance levels based on previous swing highs and lows. And then there are some opportunities in which we're looking at Fibonacci retracement and extension levels, okay, applied to the most recent move in the underlying stock. The goal that we're trying to accomplish is to achieve what I call overnight income. Again, Thursday going into Friday, all right? If the stock moves in the way we expect it to move, it will move in that direction throughout Thursday afternoon into Friday. And when that happens, you actually benefit both from price movement and theta, time decay. Okay. The question is, good question, what stocks do we apply this to? I actually do have a group of about 20 to 25 stocks, but there's about a dozen that I really focus on that when applied properly and evaluated properly, this 11-hour option spread strategy works very well. mainly because you can go through a screening process, but it really is based on human evaluations. There's no particular setup that works better one way or the other. You're looking for price action setups that also include evaluation of momentum, where it's sitting within support and resistance, and Fibonacci. Again, we're using primarily the 60-minute chart, but we also utilize the daily chart to see the higher time frame to evaluate and verify what momentum is doing. What is the price action doing? Okay, yes, this actually does work with ETFs also. The one problem I've seen with ETFs is the fact that because the pricing is relatively small, the spread ends up to be small, and then you actually have to sell more contracts to get the same sort of result, and that results usually in a higher commission cost. So sometimes it is a little overbearing. Okay, so in the 11-hour option spread strategy, if you've never done this before, you actually realize that selling credit spreads actually requires a different sort of point of view. You want to focus on selling the short strike, the part of the option spread that is closest to the stock. You want to sell that where it's away from the projected direction of the underlying stock. Okay? You ask your question when you look at a chart. Where will prices most likely not be in the next 11 hours at expiration or at 4 o'clock on Friday? Where will those prices most likely will not be? I'll show you some more examples of that in a little bit. But again, I just want to reiterate, the profits primarily in this strategy come from time decay. Okay? You are trying to generate 4 to 8% every single week or every Thursday and Friday. Okay? And that roughly comes out to $40 to $80 per 100 per 1,000 per week. Okay? And then how do you control your risk? You utilize a stop loss that it's about equivalent to 2 times the maximum credit. So if you're looking to get $50 worth of credit, okay, your stop loss is $100. You don't really want to take a loss greater than $100 to get 50. I'm like, Dave, that's a terrible bid at, risk reward. Not really when you're talking about a strategy that's 80, 85, 90% plus success. Okay? You will come out ahead over time. All right, so let me just quick talk about, again, the idea of how we sell credit spreads. All right, this is a chart pattern, happens to be a daily chart in Google. Okay, we come down, Google comes down, makes this initial bottom, bounces higher, then it comes down and makes this secondary bottom. When I'm looking at my MQ momentum, was very similar to MACD. You're looking at this momentum profile. It's quite bearish, right? See the height of the histogram bars? The second time when it comes down, when it is making a lower low, do you see that the downside momentum is much shallower? This is a bearish divergence, and then we start to move higher. So this is Thursday about noon. You're seeing that, wait, momentum is going up, price action is going up. It is a setup, is a bullish divergence. Where, if this is going higher, where should I sell my credit spread that makes sense? Where will prices most likely not be? If these prices are moving higher in this direction, you look in the opposite direction and you see this right here, 840. That is the short strike at which you sell a $5 wide credit spread. Okay? This is where your credit spread lies. Because momentum, price, you have a support level here based on this swing low at 856, and you also have a support level here based on this swing low at 845. So in order for this price to penetrate and get through to the short strike at 840, not only does it have to turn around like a battleship, turn around its momentum, go down, go through this 856 support level, then come down through the 845 support level. And then maybe it has enough momentum to get to the 840. And it has to do all of that in the next 10 hours. Can it do that? Probably not. So that's what lends to the fact that it's a high probability trade. You have multiple factors in favoring you that this will stay away from your short strike at 840. Okay? All right, go through the same exercise here. Okay? CMG, we're actually stuck in this sideways channel. You can see the swing high, swing low, swing high, swing low, back and forth and back and forth. Now, what happens here the day before Thursday when we do our credit spreads? We break below this previous support level, okay? And then momentum is increasing to the downside. We have lower lows on price. Now, when you see this pattern and you say to yourself, where will prices most likely not be in the next 11 hours? Chances are this area right above 540. Why? Because you have this side of the channel that you actually have to move back and break into, and then you have to proceed through the channel and break through the upper side before you get into the credit spread zone up here. So you could do a $5 wide spread at 540 by 545. So this is where you write your credit spread right here. Okay, momentum is going down. You can see momentum down here in my MQ momentum indicator. Price is going down, making lower lows and lower highs. So everything's pointing down, and it will take a lot not only to turn around this battleship, but to get back through the this previous support level, which is now resistance, and this resistance, which is still resistance. Okay, that's where you sell your credit spread. And again, that methodology is what leads to the fact that this is a very high probability type trade. Okay, here, same sort of thing really quickly. Here's the first high, here's the second high, here's the momentum picture, here's nice and big and green. Okay, second high, there's barely any green here. Okay, this is a bearish divergence. You can see momentum is starting to roll over. Price is going down. You have a lower low, lower high. So not only do you have this high here acting as a support and resistance level, this is where price is right now, you have this high here. So where are you going to sell your credit spread? If this is going down, momentum is going down, price action is going down, you have two highs, you're going to sell on the other side of the high. You want to sell the 190s. Okay? Your 190s. The question one of our traders is asking, you understand that I'm selling a credit spread up here? That's fine. Do I ever do an iron condor? Do I ever sell a credit spread down here? Okay, let me see. If I want to sell a credit spread down here, I want to keep my credit spread away from the price, where I think price is going. Well, I don't think price is going up here, but looks like price action is leading it this way. Looks like momentum is leading it this way, and it is going down. So I don't think I want to be standing on this side of momentum because this guy's coming down. Now, it may not get down that far. That's fine. But you know what? I don't want to take that risk. If something happens here, it's going down, maybe somebody knows something about the stock, and all of a sudden, guess what? We pull a Netflix and we're down here. All right? I can tell you which direction something's going, and I can tell you about how far it's going to go. But I don't, and if I know that it's going down, I really don't want to sell a credit spread down here. It's not worth the credit because this is not a high probability trade. This is. So just take one leg of that. All right. So it's basically, this is the same idea. It's going down where we're okay. I think I duplicated that slide. I apologize. Yes, all my the stocks that I manage and monitor on a day-to-day basis are high dollar value. It gives me a very fine gradient of the strikes that I can pick because they're usually $5 wide, and so I can easily move and shuffle between those. Some of those also have $2.50 wide spreads, so that works very well. I can pick my strike very surgically and precisely because I have a lot of strikes to choose from. Plus the fact the high dollar value stocks usually tend to have slightly higher implied volatilities on average, so I actually get more premium. Okay, I don't do this strategy on a stock that has earnings this week. I just don't do it. It doesn't make any sense. I'm not going to do an iron condor at earnings. I don't want to get in on that because I have a firm belief an iron condor at earnings is just asking for trouble. It really is. Because none of my indicators can tell me what's in the announcement at earnings. And those people that did an iron condor on Netflix last week, a week ago tomorrow, yeah, they suffered through a greater than 3 standard deviation move, and they took max loss on Friday. There's no way to come back from that. Okay, so right here, and Jan, that's a good question. I will be answering that also. So again, going back to what I consider are the goals of this strategy, okay, let's talk about consistent winners. Okay, now, just really quickly, okay, remember what our goal is? Anywhere from 4 to 8%. I think more realistically, we're talking 3 to 6% every week. So let's look at that. If I'm doing the strategy every week, say getting roughly a base 3% a week, that's a 12.5% return. Now, if you start with $10,000 into this strategy, and you do this every week for 52 weeks, you roll everything over, you're looking at a $46,000 portfolio. You take $10,000 to $46,000. Now that's just math. That's not me promising it. That's just math. $10,000 to $46,000 after one entire year. Now you can keep extrapolating this out however you want, but I'm just saying if you go from $10,000 to say something realistic like, $30,000, are you going to be happy with it? You darn well better be. That's a really nice return on an income strategy that's only in the market 1/3 of the time every week. Okay, so again, that's the opportunity we're playing in. 3% per week, 12% a month, and then 10,000 goes to 46,000. Again, just math. That's all. All right, so these are some of the credit spread strategies that we took. All right, this strategy, it roughly earned 6.6% this week. All right. So again, this is an example. Bearish call credit spread. It's 11-hour strategy. We sell this call. We buy this call. Notice it's $5 wide. So in order to earn this $444, this is $5,000 worth of buying power. The maximum loss, or the maximum distance between these two strikes, is $5 times 100 times 10. That's how you come up with 5,000. Now, I'm not going to sit and do all the math, but roughly this is about $990 earned on $15,000 worth of buying power. That is what results in a 6.6% return for that week. This is just on for 11 hours, folks. Thursday noon until Friday at 4. Okay, 6.6%. Here's the next week, roughly 7.6%. Again, please note that the 11-hour trades are in green. The other positions are part of my other weekly strategy. But what's neat is when I combine these two, that is an iron condor. It's just legged in. One goes in on a Tuesday or a Wednesday. This one goes in at noon on Thursday. Okay, it just happened to work out. But if I just look at the 11-hour strategy, actually it's $670, and that is roughly 4.5%. Okay, I'm sorry, I circled the 7.6. That's for the overall positions. So 4.5% this week on just 11 hours. Okay, here's Google. Priceline and Netflix. This is 6.9%. Okay. This week, it's on everything in green. Actually, everything is in green. There's 6 trades here. We invested roughly, the buying power taken up was about $29,000. We made $1,680. That is roughly 6.2%. It's not bad at all. All right, the next one, again, everything in green. This is 4.3%. Remember the power of compounding chart. I was using the 3% as a guideline. Okay, this one is this week, everything in green, 5.3%. Okay. Now, if I have a dash line through here, I get stopped out. That's what it is. But this is a Tuesday strategy. This is not an 11-hour strategy. Okay? Here, 5.1%. 5.1% for everything in green. This week, 4.3%. This week, everything in green, 4%. Okay, now roughly each time I do this trade, each line item in green is roughly $5,000. So $15,000 was committed to the trades. I made 4% on that $15,000. TJ, it only becomes an iron condor if I happen to see two good trades in there. I don't encourage doing iron condors unless it just happens to come up. Okay, this week actually is an extremely good week. We took a fairly aggressive positions. That's about an 8.4% return that week. It was primarily this trade right here in Baidu, 20 contracts. We overweighted it. I can't remember the exact situation, but we went in with double the normal size. Okay, so that's why we made 8.4% that week. All right, so again, we've done this almost 3.5, almost 4 months now. Now, in the strategies that I've shown you, I need to update this because it's not as big a number as this. Okay, the ones I've shown you, 43 trades. Okay, I have 42 out of 43 winners. Now, if I had some difficulty last week because of the announcement in Japan of the quantitative easing going there and it jumped, I had 1 or 2 bearish trades, and I think I got stopped out of 2 of them. So really, you're looking out of 50 trades, you're looking at out of 50 trades, 47 were good. Okay? So again, 42 out of 43, 47 out of 50 is basically where we're sitting right now. The average weekly return on the ones that I've shown you, and they've actually been very consistent, 5.8% every week. 5.8%. So why don't you just factor in a 5% return every week? Okay. Now, the controlled losses. Now, what losses have we had? In this, before I can update it, I had 1. We actually had 3, and we're controlling our risk to about 2 times the maximum gain. So if you have 3 losses and 47 wins, you're seeing there is a lot of consistency there. Okay? What is that? That's roughly a 94% win rate when you take it over 100 different trades. Okay? Again, what was the percentage? 5.8% a week. That's not even on my chart. I said use the 3. Okay, that's about 12.5. Here's 46. I really don't want to make you crazy and say, oh, look, 5, because that was like 5.5. And that's 21% a month. And that way it's 146 in a year. 126 in a year. I think this is probably the most realistic number to look at. Okay? I can't promise you that. But if the math works out according to the past almost 4 months of trading, you do the math. You decide for yourself. Okay? We do this in our trading room every Thursday at noon. Every Thursday. Yeah, you can, Francis. You can practice trading it. All you need to do is get the strategy and do it. The amount that you need to start in my account, well, let me say this, okay? I'm not telling you to say, okay, you need X amount and then you do this. I'm just saying, on average, I take anywhere from 3 to 5 trades every month. I commit $5,000 roughly to every trade. That's the buying power required there. So if I'm doing 3 to 5, let's say the average is 4, that I would need $20,000 to do these trades every Thursday. Now, nobody tells you that you have to do 10 contracts or 10 spreads per trade. You can do 2 spreads per trade, and that will cost you $1,000 per stock. And you do 4 of them, that's $4,000. That's $4,000 that you need to commit. Everything is scalable. It's just up to you what you have and what you're comfortable with. Okay? Yeah, there is no bonus or extra credit for doing more spreads than 1. You can do whatever your account allows you to do. Yes, this will work in an IRA, TJ. Yes, this video will be available on our website, valuecharts.com/blog. Okay? So again, these are the numbers we're working with. If you like high probability, high consistent winning, a consistent, realistic weekly gain, and an ability to control your risk by defining where your stop losses are, this is the strategy for you. Okay? I mean, the essence of it is this. Now, I've run this workshop roughly, since March. Well, not March, actually going back since June, and we've been implementing it. Basically, what I'm going to teach you in this 11-hour option spread strategy workshop is how to make full-time weekly profits. Because if you're pulling out 4 or 5% every week, that is a very good weekly profit. You've seen what that can scale up to over time. Okay, you're making this full-time equivalent weekly profit, but you're only in the market 1/3 of the time. You're only in there for 11 hours of exposure. Again, I've shown you that this is a high probability trade. All right, it was running close to 94%, and you're doing that, developing an income trade that runs just 2 days a week, not even 2 full days, a day and a half. I have traders that like it. They like the fact that it's in something different from maybe the futures that they trade. And they use it as a set it and forget it type strategy. It can manage itself. Once you put the trades on Thursday afternoon, then you can put the stops in and you just leave it alone. You can be more involved if you want to, but you don't have to. Okay? This workshop actually gives you a step-by-step type of method, like a checklist, that allows you to, hey, is this a good stock to put the trade on? And if it is a good stock, what is the best place to sell your strike prices? You saw how I showed you in the diagrams, in the charts. Now I'm going to tell you in the workshop exactly how you should do it. What are you looking for? What level of protection? How far away should the strikes be? All right. And then what I actually consider very important is the risk control method here. Okay, because these things won't always go your way. How do you control that risk? Okay, that risk control method allows you to foster long-term profitability. Now raise your hand if you would really like for me to show you a trade tomorrow that will increase by 100% in the next 11 hours. Yeah, me too. But if that is that kind of one-off home run kind of trade, if that is just the only time you're going to do it this year, I would much rather you show me a trade that can earn 4 or 5% every week for 52 weeks. It is a much, much, much more consistent way to earn money. And that is what you want to do. You want to control your risk and have a reasonably expected type of return. And over the long term, that's what we use to boost your long-term profitability. It's not the home run. It's the singles and doubles that you hit every week on a consistent basis. And if your trade happens to go against you, you have insurance for that. You have a way of dealing with that. That yes, okay, we take a little bit of a hit. That's fine. What do we do next week? Consistency again and again and again. This trade is extremely easy to understand. The setup is very straightforward. You do it a couple of weeks. By that time, it's almost like nothing. It's almost like I spit out where the strike is. You know exactly what to do. All right. And this trade you can run profitably 52 weeks a year. Okay. The market is open all the time. Okay. You can run this profitably 52 weeks a year. Now, This strategy is available in our workshop the last time I presented it live. I recorded it. It's a very good quality recording. It is available to you now. Did you guys see what day it is? Today's Wednesday. What's tomorrow? Okay? This strategy you can watch tonight, implement tomorrow. You can actually pay for the course this week. All right? So this is the address. I've already put it into the chat. It's valuechartstrading.com/11. Now I know what you're thinking. It's like I'm reading your mind. Okay? You're thinking, what does it cost, Dave? All right? I know a lot of you guys are new to value charts. You don't know necessarily me. You've seen what I've shown you. It sounds good, right? So I want to be able to offer you something that I think is a really, really good value as a thank you for spending the time with me today, but also maybe giving you some encouragement to get to know value charts. This is the type of training material we make available to our traders every single day, every single week. All right, we want to introduce you to us, and we think that the best way to do that is put something valuable in your hand that you can utilize tomorrow. Okay? So right now, this strategy really should be 3 times this amount, at least 150. Okay, but today, with this special webinar offer, I'm going to give it to you for $49. $49 is a really decent meal that you and your spouse can go to. You take the trading class. I had somebody walk away, and he didn't have a big portfolio because he was just trying it out. He was getting his feet in the water. He took the class. The next day he put on the spread, and he said, Dave, you know what? I took some of those trades, and I walked away with $200 that day. He said, I can't wait till the next week or that Friday. He said, I can't wait till the next week when I can really implement this. So he went back and he watched the videos like twice the next weekend, so he got some more familiarity. Now he was in my trading room, so he could see what I was doing. Okay, so Thursday noon, he put them on again. He emailed me that weekend. He said, Dave, I really implemented it. I doubled my size. I made $500 or $600 this week. I said, that's excellent. He says, I'm planning to do this as a critical part of my income strategy going forward. And he says, I can see where the risk control comes into play, but also where the consistency will come into play. So right there, I know that he understands the value of this program. If I asked you $149, I wouldn't blink because I know it's worth it. But again, as a thank you and as a way to introduce us to you, really want to give it to you for $49. That's a drop in the bucket. I know some traders spend more than that on commissions on this strategy every single week, and they happily pay for it because it means they're getting some nice cash flow. So the offer right here is go to valuechartstrading.com. Okay, /11, just like 11 hours. Okay. Take the advantage of this opportunity. You may not come around again, okay? I'm telling you, I know what it's worth. But again, this is a thank you for the time. If you have any difficulties at all, go to support@microquant.com. That's our help desk. The individual there, his name is Min. He's a great guy. He takes a very good care of our traders. And he can help you if you have any trouble. But you go to valuechartstrading.com. I put it in the chat box, so it's an easy link. Go there right now, and it's $49. You will get immediate access to the trading room, to the video. Watch it tonight, and then come visit me tomorrow. Actually, that's a good point. I do this trading strategy in my trading room every single Thursday. Now, you won't get access to that because this is just the strategy. You know what? Go to this same website, valuechartstrading.com / watch this. It's GO, G-O. Okay? GO. For an additional, and I'm not trying to squeeze a bunch of money out of you, but for an additional $7, that's a Starbucks, Okay, ask my daughter. She'll tell you, Dad, it's just $7. It's just $7. You'll get a 30-day trial into the trading room. Okay, it's worth it even just to pop in Thursdays at 12 o'clock. Therefore, you can get the strategy, the trades that I actually take. Okay, $7. You'll get 4 Thursdays of 11-hour option strategies. That way, you can learn how to do this on your own. But for this additional $7, if you go to ValueChartsTrading/go, okay, I'm going to put it in the chat box right now. Okay, I'm offering this to you again. So you got to get both, two separately. I get the 11-hour strategy first, and then come back and go. All right, get into the trading room. See me tomorrow. I'm going to put these on tomorrow. It's $97 after the first month. I'm sorry, I didn't clarify that. $30. $7 for the first 30 days, and then $97 going forward. Now, that $97 is actually very valuable. You can go back and forth between the two trading rooms. One's futures, one's stocks and options with me. And then you get like the members only video on a daily basis. You get a lot of stuff. But I just want you to take advantage of it so you can see me trade the 11-hour strategy tomorrow. You can take those trades. Okay, so step in here, get the ValueChartsTrading.com/11 for this highly discounted special rate. I'm giving it to you for $49. And then after you sign up for that, go to ValueChartsTrading.com/go. Go, like go to the trading room. Go see Dave trade. Go make a lot of money. Again, I can't promise that. I'll just show you what I show you. Okay? It's too bad I can't promise you guys anything. But all I can do is say, hey, this has worked really well in the past. I can't promise that it will, but I don't see why not. The webinar is about an hour and with questions, probably like an hour and 15 minutes. Like I said, it's not rocket science. It's not like a hyper complicated strategy. It's something that is straightforward, that when you see it in its entirety, you're like, hey, that makes a lot of sense. Hey, and those parameters that Dave gave me, that sounds like a really good checklist. So we're just going to walk right through it, do the trades, and guess what? You go and you give that 7-day trial, $7 trial a kick there. Yeah, you'll get the trades. You'll get to see me trade the strategy 4 weeks in a row. If I'm doing 4 trades a week, that's roughly 28 trades you'll get. What do you put in the promo code? Nothing, Patrick. Nothing. Yeah, it should pop up as the $49 price. And then when you go to go, it should be the $7 price. Yeah, we don't try to be tricky. It'd be something we'd have to program again, and it gets too complicated. We're straightforward. Hey, it's $49. Thank you here's a good deal, $49. Thank you for your time. Go out and make some money. Okay? Because we know you will. All right? If you want to visit me, come say hi, watch me trade, take some trades, get some recommendations, just like everybody else in my trading room. Go to ValueChartsTrading.com/go. See me tomorrow. Ask me a bunch of questions. Okay? If you have any difficulties, questions, hey, Dave, I forgot what all those 11 or go is, send an email to support. Min will respond to you tomorrow, and he will hook you up exactly what you need. Okay? You can send him an email in the morning. You'll be in the trading room with me by noon. No problem at all. Hey, that trading room runs from 9 a.m. to 1 p.m. Somebody asked that. I'm sorry I missed that question. Does this strategy require special software? No. If you have something with bars and something that you can see a previous high, previous low, and then maybe a momentum indicator like MACD, that's it. You can do it. I use value charts indicators, but you don't have to have them. My MQ momentum indicator tells you what I need to know about momentum. I have some moving averages on there. Any charting thing has moving averages. Nope, you just have to see the price. Because the the value of this workshop is not in the way I use the indicators. The value of this workshop is the way you can do this without indicators. You know, I can find my way in the woods with a compass, but I can also find my way in the woods with a fancy GPS. But I can still get around the woods. It just depends on what level of detail do you want. With this 11-hour option strategy, you should be able to do it with both or either. Nope, you don't need TOS, you don't need value charts, whatever platform you use, as long as you can see it. I had someone use, they didn't have a charting platform. I don't know how they did their trades, but they went in and they used a free charting service online. I don't remember what it was. He showed me like a little screenshot. I'm like, where'd you get that? And he said, this website. I'm like, oh, okay. He said, I don't have TradeStation or TOS. I'm like, okay, but you can do options, right? He goes, yeah, I can do options. I just have to call my broker. I'm like, wow, this guy's old school, but all right. So he could do it. He made money. I guess he eventually got his own charting program. That's fine. The list of stocks. What I would do, go in to your, I think Yahoo Finance has it, get the highest call and put volume stocks, and then screen everything out that's less than $100. Everything above that, that's reasonably good. I would list them biggest to smallest in price, and then I would probably pick the top 20. I don't, do I ever consider standard deviations when I'm picking my strikes? No. Because momentum and the stock price and the way I read a stock chart has nothing to do with a mathematical calculation. I understand the mathematics behind it and I appreciate it, but it doesn't have anything to do with the reality of, it doesn't have as much influence on the way the stock price will move than me evaluating both price action, support and resistance, momentum, those factors that are tangible on a chart. Okay, a standard deviation is just a number. Yes, it's a certain distance from that price, but it doesn't have as much merit as, okay, this is, you know, it hit that resistance level 3 times and momentum keeps getting weaker. That is a much more concrete item to me than saying, yeah, that's 1.5 standard deviations away. So yeah, it's 1.5 standard deviations away to the downside too, but that's not going to affect the stock price like this really firm resistance level. This is just on equities, Barry. Oh, okay. Thanks, Charles. Thanks for the heads up. I think they revised the process. If you go to valuechartstrading.com/11, sign up for the strategy. Charles just told me they're going to offer you the $7 trial in the platinum membership right after it. So cool. Everything's right there. Just get the valuechartstrading.com/11. Please do. Okay, guys? I mean, I want to have as many people into this strategy as possible because that's my way of helping as many people as I can to generate an income. A lot of my traders come in with certain needs. They want to generate an income. Some of them are retired. Some of them are looking to leave their job. I have one guy, he's already contacted me. He says, Dave, I want to become a full-time trader. I'm going to lose my job in the next 4 months. I'm like, how's this guy know it's 4 months? Maybe they let him know ahead of time. But he's looking to supplement to recreate his income. So I'm working with him one-on-one. So when I work with my traders in the trading room or individual consults, you guys have a special place in my heart because you're trying to do something that most people just sit back and, you know, they don't want to worry about it. You guys are actively trying to do something. So let me put something in your hands that I know has been working consistently. Let me put it in your hands. Let me show you how to do it. Okay? I'm not one of these guys that say, here you go, do it. You know, leave me alone. No, I want to show you how to do it. I want to make sure you understand how to do it. I want you in the trading room so you can see me do it, and you can see me do it for 4 weeks, and then you can say, okay, because, you know, the first time you may not have any difficulty. It's just easy as pie. Very simple, done. It's not that easy all the time. Look, last week was a little tricky. So watch how we kind of manage it, how we manage our stops. What do we do when it doesn't go perfect? Okay? Learn those things too, because this strategy is sound. It's robust. Okay? Sometimes it'll have a little bit of trouble, but then we have mechanisms to protect us. Okay? We have mechanisms to help this be consistent. That's the essence of this strategy. I can't make it any more plain than that. I mean, I can't, I want is $49. If $49 is a lot for you, maybe you should be a little bit more careful with your trading, because you have a $20,000 portfolio, you implement this, your commission cost will probably be about $20. It depends on your commission. So if $49 is a lot for you, you gotta be careful. You kind of get what you pay for in this world. I just want to give it to you at a really good discount. Okay? Yeah, you should be able to watch the webinar tonight. Yeah, I have a lot of traders. Guys, I've been working at this for 21 months. I know what my traders need. I know what traders need that are out there that are trying to do this for themselves. That's why I came up with this strategy. You don't need something with, 50 different steps with, 30 different conditions, and you need 10 different indicators. Now you need something simple. You need something simple that works, you can understand, you can implement, you know how to protect yourself. You don't have to sit there and stare at it every single day of the week. Okay? So, I mean, this is what we have. Again, is there any more questions? You guys asked a lot of good questions. Hopefully you take advantage of this. It should be on demand. You should get it. Again, any trouble at all, contact our support at microquant.com. Min will help you. His name is Min, M-I-N-H. Cool guy. Really cool guy. And really, really responsive. So whatever you guys need, just say, hey, Min. That's what I do. Hey, Min, I need some help. And he takes care of me just like he will take care of you guys. So please, I don't want to take up any more of your time, because everything is in the strategy. It's in the recorded workshop. It's right there for you. $49. It's almost like a 66% discount here. valuechartstrading.com/11 11-hour option spread strategy. Okay, tremendous value. Take it, watch it, trade it tomorrow. Tomorrow's Thursday. Tomorrow noon. Okay? If you give the trading room a test. Come in at noon. I'll wait for you. Say hi. Say hi, I'm new. Hi, I was in your webinar last night. I would love to see that. I really would. I like people that take action, because these trades will be here every single week. The question is, are you going to take action right now to take advantage of them, because they will be coming around. Okay? Like clockwork, every week. Okay? Consistency, consistent gains, consistent protection. Okay? Everything is consistency. And that's what this trade will bring you. So I hope you take advantage of it. You realize what special value I'm giving you tonight. valuechartstrading.com/11. I'm going to put it in the chat box one more time. That way it's really easy. Just click away. You'll come to this page, go through the process, and right there you'll have access to it. So I really appreciate Andres. It doesn't go to your inbox, but what you should do, you should be able to go to valuecharts.com and then access it that way. Yeah, this is now, Jan. This is on demand. So whenever you want to watch it, as many times as you want to watch it. I had somebody first week, he's like, Dave, I watched it 5 times. I said, you probably know the strategy better than me. And he laughed. He laughed because that week he made money. So, I mean, that makes me happy, guys. Really. You guys are here, so I want you to make money. Anybody that seeks to spend some time with me and listen to me talk, I want you to make money. I make money, so might as well you guys too. All right? David, I think it is... I would try all the tabs, because my interface looks different than yours, and I think they were updating them. So it should be like a members video or something like that. You should see 11-hour option spread strategy. If you have any trouble, send an email to support@microquant.com. I think Min might still be there. Yes, support@valuecharts.com. Yep. All right, guys. I've kept you 30 minutes longer than I wanted to because I value your time. And, please let us know if you have any questions at all. Okay? And I hope that you get as much out of this strategy as I do giving it to you. Okay? I believe in karma. I believe if I take care of my traders, if I believe I try to help other people, that the good things come to those that try to help each other. And Lord knows the way the world is these days, you have to help each other. And the opportunity's there, so take advantage of it. If you need anything at all from us here at Value Charts and MicroQuant, send us an email at support@microquant.com. Okay? We're here to help. We're here to support you. We're here to teach you, guide you, and give you as much training as you possibly want. Okay? We're not here to just sell you something. We're here to help you become better traders, and I hope you get to know that about us. We're different than anybody out there. Really are. That's the kind of that's our philosophy at Value Charts. So I hope that comes through, and that we can help you. Let us know what you need. We're more than happy to take care of you. Okay. So again, thank you very much for your time this evening. The price for the 11-hour option strategy is $49. Okay? The $7 is for the trading room. So you can actually come and see me trade this strategy tomorrow. Okay? I don't mean to complicate the system, the setup, but it is $49 for the workshop, the on-demand, get it right now, watch it tonight workshop. Okay? Sorry for the confusion, John. All right, and then they're going to offer you the trading room. Take advantage of that for a Starbucks. Come over, watch me trade, and then come over by noon tomorrow. We'll trade this option spread strategy right away. Okay. All right, everybody. Have a great. The automatic renewal for the trading room, TJ, is $97 a month, but it's going to be there when you sign up for it. It'll give you all the details. The first month is $7. Starbucks latte. Yeah, I think it is an automatic renewal, by the way. But the $49, no, that's one time. That's one time. That's your strategy. That's your recording for however many times you ever want to watch it. Okay? Rick, I have two teenagers, age 11. So trust me, yeah, they know where Starbucks is. And I say, I don't even buy myself coffee that expensive. And they kind of laugh and they say, Dad, can I still please have a Starbucks? And I'm like, all right, go ahead. I know a lot of our traders have Starbucks, so it's like, good. That's what we can equate it to. Me, it's all right. I'm more than happy to buy it for my kids. I don't need it. All right? All right, guys. Thank you very much for the evening. I'm going to leave this up here right now. TJ, tomorrow's Thursday, man. I don't know how else to say this. Get the video. Watch tonight. Trade it tomorrow. Make some money by Friday. And I think you're going to be happy with it. I mean, I would try to get it tonight, TJ. Yeah, not for my sake. I just think, I think you'll learn a lot with that video. Thanks, Rick. I appreciate it. All right. Anybody, any trouble, any questions? Contact support@microquant.com. We'll take care of you. Okay. It should be 11-hour options strategy, David. Again, feel free to go ahead and shoot over that email to support@microquant if you have any questions. I still believe Min is in. Okay? All right. All right. Thanks again, guys. Thanks a lot for the great evening. Enjoyed it. Good luck trading. I hope to see you in the trading room. And in all honesty, if you come to the trading room tomorrow, please say hi. Say, hey, I was in that 11-hour webinar last night and I got it. I liked it. Let's trade. And I'll say, let's go. Let's make some money. David, they may have moved it. I would check each of the tabs. But again, if you have any trouble, contact support@microquant.com. I just don't have access from my location to access your members area, else I would tweak it for you right now. Okay? Yeah, that's the fastest way. Send them that email. That way they can respond back to in the form of an email. And I think it's also tied to, when you make the purchase and stuff like that. All right? Thank you again, guys. Everybody have a great evening. Thank you again for the help.